Sonal Varma joining in, Managing Director and Chief Economist, India and Asia ex-Japan, Nomura from Singapore. Sonal, very good morning to you. Thank you so much for coming in. I want to start with your take on the GST cuts that have played out. What is the kind of actual boost to the Indian economy you see? Does this help change the mood that FIIs have vis-a-vis India?
Well, it's definitely a major positive. I think importantly, it's a medium-term growth positive given the simplification and efficiency gains, more formalization we will see over the coming years. In terms of the near-term impact, the main thing I think is the disinflationary impact from GST cuts. So on our estimates, about 15% of the CPI basket will see the GST rate come down from 12% to 5%. So, I mean, in theory, if everything is passed on, then the disinflation will be quite significant. We do expect price cuts to come through, and our estimates, CPI inflation should moderate by between 0.3 to 0.4 percentage points on account of the GST cuts. I think importantly, the fiscal hit is much less than bond markets were fearing. So the net impact of, around 480 billion INR, that's 0.13% of GDP between center and states combined, is significantly less than what markets had feared. So I think, the concerns on fiscal seem to be cooling down. It is positive for inflation. Near term, it will change the dynamics in terms of timing of when consumption picks up. For the full year, we haven't changed our GDP projections. But as I said, medium term, definitely a big positive.
Hi, Sonal. Morning. Alex here. So I want to read a little bit deeper into these two statements that you've made on inflation and on the fiscal hit, and tie that in with the way that bond yields in India have moved in the recent past. Do you anticipate that, given the expectation that inflation could cool further, which in the way of monetary policy is a good thing, you could anticipate, or that reinforces the anticipation of further cuts down the road to further spur growth, and fiscal hit not as bad as anticipated? Do you anticipate that the yields could cool off from this point?
Yeah, we do think there should be some cooling off on Indian bond yields at the long end. I think there are three dynamics actually that are ongoing. One is the global backdrop with the weaker NFP, expectations of Fed cuts, and long end yields in the US itself cooling down. So there will be some spillover from that onto Indian markets. Second is the risk around fiscal. So the main concern for the market was this impact of GST, with estimates of almost 1.5 trillion in total fiscal losses. But as we had actually anticipated, the net fiscal impact is less than expected. And at 480 billion INR, this can easily be covered up by the compensation cess. So on our estimates, the compensation cess should have surplus funds of slightly over 400 billion. So any hit on GST actually can easily be compensated through this cess fund. So there is no additional borrowing that is needed. I also think that the finance minister's comment that they will adhere to the 4.4% fiscal deficit target is an important commitment, going forward. And third, as you said, the GST will lead to some disinflation going forward. Already, inflation for FY26 is tracking below the RBI's projection of 3.1%. And the cooling down of GST comes at a time when we will also see the tariff impact on exports play out after October. So we do think conditions are in place also for additional monetary policy easing. So a combination of the three factors should be positive for long bonds.
Got it. Sonal, morning, Neeraj here. So what do you now look forward to? I mean, on the macro front, the thawing of relationships, India, China, India, US, yes. But on the micro front, would the Fed rate moves matter the most in the very short term, or is it something else?
I think both domestic and global factors are quite important. So the Fed rate cuts, but importantly, whether US macro data move in the right direction. So, i.e., we are seeing softness in the labor market, but do we see higher US inflation because of the tariff pass-through? Because that is sort of a mild stagflationary outcome for the US, which markets will not like. So I think the macro outlook on US is broadly important, not just the Fed rate cuts, but domestically as well. I think the economic impact of everything that has been announced, I think, is still ahead of us. So, for instance, the thawing of relation, I mean, whether that leads to any reduction in the penalty or the tariff rate is what really matters. The impact of the tariff on exports is expected only after 27th of August. A lot of that data is going to come out in October and November. With the GST cuts, to what extent consumers actually increase their purchases because prices are coming down, whether Diwali sees this big jump in consumption, which is the anticipation here. I think some of those triggers, I think, will be important. So a mix of global and domestic factors, actually.
Sonal, last question, and I'm just wondering, on balance, whether you think that the legal aspect of the tariffs, if it does get rolled back because the Supreme Court comes in and says that it's not constitutionally valid. On balance, do you think that will be positive or negative for global economy and for India in particular?
Our view actually is that there are other legal processes that the Trump administration could use to impose tariffs. So, even if the legal verdict is against, there's also other sections, for instance, Section 122, that can be used to actually replicate the reciprocal tariffs across countries. So while there is this uncertainty right now in terms of the legality of the tariffs, we don't think the tariffs are actually going away. So base case for us is that one way or the other, the US tariffs are going to stay in place. Currently, if you look at the effective US tariff rates, it's around 10.5%. Our view going forward is that the effective tariff rates will move up closer to 19.5% over time. So that's the base case we are working with.
Helpful. Thanks so much, Sonal, for taking the time. Pleasure speaking with you as always.